I mean, I always like to say that there are three things that people hold closest to their hearts. One is their family. One is what I like to link to their faith. Mm-hmm. One is their health, and one is their money. And you don't screw with any of that.
All right, Jeff. Well, thank you for coming on the show, man. Appreciate you being here.
I got to be honest with you. I've done, I don't know how many podcasts, a lot. And this is the first one that I've done that feels like super real. I mean, the room, this is really super cool.
No, it's great. And so Jeff, I'm really excited for this episode and to talk to you. Frankly, I never had a chance to really sit down with you, but I've been seeing your amazing work that you've been doing through Fuel.
Thank you.
You guys have been here for a while. All this kind of Miami tech stuff has been bubbling up now recently, but you guys have been doing the hard work for a long time now, for years, right?
Yeah, well, this is our 4th year, so it's been time flies.
And 4 years is like a lifetime in the tech space.
It seems like it went like that though.
Yeah,
I mean,
it's true.
When you're putting in 80, 90 hours a week, it goes by pretty fast. In fact, it's hard to believe that it's been 4 years, but it has been.
Yeah, so I want to learn more about Fuel. And I'm sure our listeners want to learn more about Fuel. But real quick, just a quick background on you and how you got started and transitioned into VC. Yeah. It'd be great.
Well, so early in my life, I was a hockey player, and I lived up in Minnesota and North Dakota and Canada, places most people don't know where they are. My hockey career ended, and I started 4 companies. Just because for the first time in my life, I just had all this time on my hands, and I didn't really know what to do with it. Mm-hmm. I'm a big believer that sometimes being at the right place at the right time, sometimes you just don't even know why, but you're just there and things work out. And I think there was a lot of luck. But make a long story short, I sold those companies off when I was 24. And I just got really lucky and got an invitation to meet some very senior executives at Merrill Lynch. Mm-hmm. And so that turned into a 21-year career, lots of incredible jobs. The one thing I always like to say to people about my time at Merrill Lynch was the education that I got. I mean, it was just, I had Ronald Reagan's speech coach for 3 years. You can't
That's
put
cool,
money on that.
That's
you know
priceless.
What I'm saying? I mean, so it was amazing. So when you say, well, how did I get into venture capital? Wall Street was an incredible run. I mean, absolutely. I mean, the stories I could tell you, you wouldn't even believe them. But what ended up happening is, I've always kind of prided myself on getting on, my horse and riding out into the future, and being able to come back and tell people, hey, this is what things look like. This is what we need to do differently. And I think I was in a large way known for that at Merrill. A lot of people used to call me, the rock star banker. Which kind of gives you that little edge, right? And
Sure.
It worked for a long time until it didn't work anymore, right? You get bought by a major bank, and that being known for something like that isn't always so great. So I started to realize that, look, if you think about your iPhone, it's only 11 years old.
Yeah, it's crazy.
And so when you start to think about how you interact with the world around you, and how different that is today than it was even 2 years ago. I mean, it's completely different, right? I mean, what was it? It was, 10 years ago, if you went to go see your mom and dad, you had a map.
Sure.
Right? And you had...
Or printing out MapQuest. Remember MapQuest?
MapQuest. I mean, but everything has changed. But if you sit down and you look, you sit down with 10 investors and you go over their portfolio, it looks exactly like it did 20 damn years ago. And that really bothered me. And, Bank of America Merrill Lynch is a very big institution. It's a hard ship to turn. And instead of looking the guy in the mirror every morning and saying, well, you're not doing anything about this, but you're super passionate about it, I just decided, it was time to do something different. And if I wasn't going to do it, when I did it in 2016, then when the hell are you going to do it?
Right.
And so here I am.
Nice, man. Nice. Yeah. Then you started Fuel. And what's the thesis behind Fuel? How do you differentiate against other VCs?
I think our biggest edge is that, myself and really my right-hand partner is a woman named Maggie Vo, who is a CFA, ex-hedge fund manager. She's an immigrant from Vietnam. I always like to say nobody can outwork me, She might be the only person I've ever met that can possibly keep up with me, and maybe even actually outwork me. But the one thing about Wall Street is it has incredible plan, process, and discipline. I mean, the financial world is one of the most scrutinized businesses on the planet, and that teaches you a lot of things. And the one thing that it teaches us is that we have an extreme responsibility to the interests of the investor. Mm-hmm. And when I did all of my research, and I'm not saying that this is everyone, and it's just my humble opinion, mm-hmm. but I felt like, the interests of the investor might not have been at the forefront of this asset class. And so when people say, well, what's your biggest, edge? I think it's that, between Maggie and I, you're talking about 31 years on Wall Street and really at the top of the house, responsible. When I left, was responsible for $386 billion of entrusted assets, mm-hmm. $2 billion P&L. Yep. I mean, it wasn't a joke. So I think we bring a tremendous amount of adultness, mm-hmm. if that's really the right way to say it.
Yeah, yeah.
And a high respect for the individual's interest.
Definitely. And
transparency, communication. I mean, my phone is available 24 hours a day, and we have global clients. I mean, it's normal for me to be up at 3 a.m. talking or texting back and forth through WhatsApp with an investor.
Yeah, and I think that's what entrepreneurs respect when they look for a potential partner with a venture capitalist. They want someone with the same amount of work ethic that they have, because being a founder is incredibly difficult, right? It takes a real toll on you. You're really never shutting this off. Yeah. You don't want to be involved with somebody who's at, on the mountains or the slopes of Aspen, 50% of the time, and they're not really kind of, in the trenches with you building, right?
Yeah, I think that's a really an excellent point, because, I follow a lot of my peers, I guess.
Sure.
And I sometimes I sit back and say, man, I wish I could figure out how they're doing it, because all I do is work.
Yeah, definitely. And listen, if you are going to invest in startups count on you to roll up your sleeves and help them, right? This is not it's not usually kind of a passive kind of investment. I mean, some VCs, they make passive investments and they kind of know and mandate to the entrepreneur, like, hey, I'm going to give you money, but I'm not that kind of roll up my sleeves investor. You seem to be the opposite. You seem to be like, you'll go to bat for your founders and really do that. So
yeah, I think that could be another, our mantra, is founder focused and investor driven. That's our mantra. So, and we've been told by the majority of our founders that we do have a different style.
Yeah.
It's not my wish to come in and screw up the dream.
Right.
I mean, you're a founder,
yep.
and you know what I'm talking about. I mean, one morning or one night you came up with the idea, and you have it in your mind of what you want it to be. And I think one of the worst things that can happen is you bring in a third party that wasn't a part of that dream.
Right.
To say, you know what, I think you had it wrong.
Yeah.
And I think that kind of screws up the whole journey. My job is to provide fuel, to build the company and give you guidance and advice, keep you on the track. And if I think that you're going to do something, because I'm older than you, mm-hmm. and I've been, maybe around a little bit longer, and let me tell you something, Wall Street truly was a jungle. Mm-hmm. And, as I said earlier, I had some of the greatest mentors that you can put your, money to. Mm-hmm. And if I, that's really what I want to try to bring to the table.
Yeah.
I was a part of leadership development at a very, very big organization. And to be able to do that to founders who may not ever have the ability, that kind of stuff doesn't even exist anymore. I mean, yep. Merrill Lynch used to have a university on leadership. We had our own hotel, and that stuff doesn't exist anymore.
Yeah, no, what you said is very important. Like, because I experienced this myself personally as a founder. The VC or your investing partner is there to help you support the mission and the vision that you set out to do, right, and help you get to that destination point. In my own experience, I had a part where my investors, a few in particular, made us pivot down a different direction. We ended up selling the company, but looking back on it, there was other paths that we could have gone down on, but it looked like the harder, less likely to success path, but it might have led to a bigger outcome versus like, there is some, markings on the trail here. Let's kind of figure out where this goes. We had a good outcome, but maybe it wasn't what we thought it would be. And the initial vision of the company is where we should have gone. Looking back on a retrospect, I wish I had some investors that really doubled down on that and put more money to go for the bigger goal. That's really important because there's so many of those forks in a road when you are an entrepreneur that you can go on a different path that will completely change the trajectory of your company. Make sure you're aligning yourself with VCs that are aligned with you. That's the long, hard journey that you're going after, not the, hey, let's go here because there's more short-term revenue here, or maybe there's an exit opportunity here. Really align yourself with people that believe in the vision, right? So that resonated with me when you said that.
And I like how you said that because I think it's very important.
Yeah, awesome. So tell me about your portfolio. How many companies do you have in your portfolio?
We have so the flagship fund has 25 companies.
Okay.
In it. Yeah, and we're done with that fund as far as identifying portfolio companies to populate it.
Okay.
But, 25 companies around the world. Knock on wood, but it's a hell of a vintage.
That's awesome. So the flagship fund was earlier. It was
2017 is when it kicked off.
Nice.
And so we're at that point now where you're starting to, see the exits.
Sure.
We actually have 7 companies right now that are either, signing letters of intent with SPACs, targets for SPACs, and there's
Great.
I like to call it a SPAC off, right?
Yeah.
There's like 2 or 3 of these SPACs, and they all want the company.
Sure.
That's a good place to be
Absolutely.
in. And we have a monster in TradeShift that's valued at around $2 billion, and I think it'll go public around $5 to $10 billion.
That's great.
At a minimum, in a year, a traditional IPO.
Mm-hmm.
And then we got a couple of companies that are right now being sought after just for acquisitions.
Nice.
So there's a lot going on in the next 24 months for Fuel Venture Capital.
That's awesome. And some of the local companies that you've backed, some of the highlight ones, right? You have Taxfile in the portfolio. Great. Ricky's a great entrepreneur.
Yeah, that's a great story.
Yeah.
So I met Ricky and Michael in 2016 at a Mexican food restaurant with my dear friend DJ Irie. I just left Merrill and was talking to Irie. Irie and I actually invest in a lot of private companies before I even left Merrill. I mean, Irie and I were invested in Uber early on and a bunch of other companies. And again, he's like my brother, and he's like, hey, I need you to go to this lunch with me. And I was like, well, what's going on? And he said, well, I need you to meet these founders, and they're building this tax company. I'm like, Irie, come on, I don't really have time. And I met with Michael and Ricky and fell in love with these guys. And I think outside of Ricky and Michael's family or fathers, and Irie and I were their second investors.
That's awesome.
And large stake investors. And then when I started the fund, I sit down with my investment committee and it's like, we need to look at this company. There is conflict of interest. I invested in this company as an individual, but it's an important part of our firm.
That's awesome. And so you from a stage perspective, do you typically do pre-seed, seed, A? Like, what's your kind of sweet spot? Where are you looking to get in?
Yeah. So I come from the public market. So my investment thesis and process is, I think, significantly different maybe than a lot of other portfolio managers in this asset class that you might visit with.
Okay.
And to me, I look at my investing time frame in more like a 5-year period versus 18 to 24 months. I personally think that if you have $200-300 million and you're deploying all that capital in 18 to 24 months, again, my opinion.
Yep.
But I just don't know how the hell you're doing the due diligence and the thought process that you really need to do in order to be able to do that right. Yep. So I mandated that, our capital cannot be completely deployed until the end of 2022, believe it or not. And that's because we phase in. If you think about, and I'm going too deep here on this, but
please do. It's great.
If you think about the biggest differential between investing in public markets and private markets,
yep.
The biggest differential is knowledge. Right? In the public markets, knowledge is abundant. You and I can get as much information as we want to make a sound investment decision. Mm-hmm. It's not hard.
Right.
But in the private sector, knowledge is scarce. And that's where talent and hard work comes in.
Yeah, and also intuition, right?
And intuition, there's a lot of that.
Yep.
What does your gut say? Just like Michael and Ricky, right? I just knew that they were my kind of guys, and I was willing to invest in them. But in that early stage, just because I like them, do I write a check for $5 million? Mm-hmm. I think that's probably irresponsible. Mm-hmm. But maybe I give them $250,000, or maybe I give them $500,000, and then I put them on KPIs, and we work together at meeting those KPIs. And that's really how I approach this space. So when you ask me about the phases, it's really from seed all the way out to series, C, or convert to IPO. Like with TradeShift, we just did a $50 million deal on Friday night with TradeShift, and it's a convert to IPO. But we, now that we're 4 years into this life cycle, we're not investing in seed companies. We're not investing in bridges or even Series A, because it doesn't work in our timeline. This is an 8-year fund. So it would be, again, irresponsible of me to be investing in early stages at this point in my own life cycle.
Right. No, that makes sense. And plus, you also have to have reserve follow-on funds, for your portfolio companies, right? So
yeah.
Very, very cool. I'd like to talk a little bit about the rise of Miami tech as we kind of see it, all this, momentum that's happening.
Yeah.
Love to get your thoughts on it, because it feels like from November to now, the whole ecosystem has completely changed. What has happened in the last 90 days or so has been a whirlwind. So I'd love to get your perspective. You've been here for a while. You're a VC in Miami before it was cool to be a VC in Miami.
Yeah.
So.
I was a VC in Miami when everyone else thought it was stupid.
Right, exactly. Usually that's how these trends start out, right?
Exactly.
Is, they start off as everybody thinking you're still like Airbnb, right? Like, you mean you're going to let strangers into your home,
right?
And give them your key?
That's right. My favorite is Uber, right?
Right.
What do you mean you're gonna have a stranger pick up your daughter at the airport and you're gonna be okay with it?
Exactly.
Yeah, exactly.
So often the best ideas kind of seem like that, but obviously your thesis is proven right, and Miami is a hotspot. So tell me about your thoughts on it. Obviously, from your initial perspective of why you bet on Miami, and now kind of your thoughts and perspective as all this influx of VCs and talent and money is coming into the city.
Well, I've been here for 21 years, right? So the why Miami, I always tell people you either love Miami or hate Miami for the exact same reasons.
Mm-hmm.
So if you're comfortable being a gringo, which I am.
Yeah, likewise.
And, your language is not the number one spoken language.
Yep.
If you're okay with that, then you love Miami.
Yep.
If you're not, this isn't your place.
Yeah.
If you're okay with, you need to have an understanding, empathy, and desire to learn a lot of different things from a lot of different people. This is a city of immigrants, and all these people bring a different way of thinking. And if you are really into that kind of stuff, this is a great city. And if you just, you're just not, then it's not, right? I don't even consider Miami America. I always tell people that. I mean,
it doesn't feel like it.
I mean, you're a little farther north from me. I mean, if I have to drive north of 32nd Street, I get pissed off. So, but I wanted to come up here and meet with you. But yeah, it's, first of all, it's a great, great city. And why does it make sense? We're so close to Latin America. It's truly an international city, and it's a city of understanding, like I said before. So you think about creators and you think about founders, you think about, the need to disrupt. It's all about, compassion, understanding, like-minded people. There's not a greater city in the world to be doing this.
I would agree. Yeah.
Why it ended up in San Francisco of all places as the mothership is beyond me.
Sure.
I mean, it's a boring. It's a weather sucks. I don't understand
proximity
any
of the university, Stanford.
Yeah, that's what it was. That's truly what it was,
Yeah.
and I think that's really the point here.
Right.
So why is Miami now, the talk of the town? I mean, I love the University of Miami. We have great educational schools, but let's be honest, they're not known for computer sciences and these types of things.
Correct.
So what's going on? Well, what's going on is this notion that technology has democratized information.
Correct.
I don't need to be, I don't need to go to San Francisco, go to school at Stanford, and then have to stay in Northern California.
Right.
I can go to Miami. I could go. Quite frankly, I could go anywhere the hell I want. As long as I have a Wi-Fi and I have a laptop, I can do anything I want from anywhere I want. Right. And so why Miami now? Because you can, because you don't have state taxes, because it's an international city, because it's a city that is different than any other, American city in America. It's beautiful. We have warm water. We don't have great white sharks in our oceans.
Right.
I mean, I can go on and on and on.
No, for sure. And COVID, I tell folks, you can't unscramble this egg after COVID. This is a new world that we're all living in together, right?
Yeah.
And you have now shifted the conversation when you have Google and you have Facebook and you have all these big companies saying, okay, you can now work from anywhere.
Right.
Basically. So it becomes a conversation of where do you want to live versus where do you have to live? And when you have that conversation, Miami is going to be in the top 5 probably, in most of those conversations, right? Because of all the things that you just mentioned. There's a lot of good factors about Miami. And also what you mentioned is very true. The technology and learning tech and being an engineer, that's been democratized to an extent, where before you had to go to Stanford to get the computer science education and really learn how to be a great engineer. Now, not only do you have great boot camps like WinCode and IronHack and online boot camps, but also YouTube and the wealth of information you can get just by the internet for free.
Yeah.
Anybody that really wants to be an engineer can learn to be an engineer if you really want to.
Right.
So all of a sudden, talent is democratized. You have access to that everywhere. So Miami, I think, is in a pole position, honestly, to take advantage of all of these trends.
I agree.
And bring more talent and more folks like you to the city. So that's amazing. The show's called Lessons Via Leaders, so we talk a lot about, just lessons for our listeners that they could take from you, that you've learned in your career and throughout your career. So first off, starting a fund is now trendy.
Yeah.
A lot of folks want to start a fund. A lot of folks want to be a VC.
Yeah.
You see these micro funds starting up. You see 5, 10, 15, $20 million funds. You see these things now called rolling funds, right?
Yeah.
This is the latest trend on Angel List, where, folks that are also entrepreneurs, they're starting their own funds just by their followings on Twitter. And they have all these mini LPs that are investing 10 grand as LPs into it. I would like to get your thoughts on all these trends and also advice for folks, knowing what you know now, that want to make the transition into being a VC. What would you tell them? Some advice to start.
Well, I don't want to take a piss in anybody's pool. Okay. So
Well, take the glamour out of it,
Yeah.
because it seems glamorous from the TechCrunch headlines, right? So
Yeah.
let's take that out first.
Well, first of all, I pinch myself every day. I absolutely love what I do. I can't, I don't sleep much because I just,
You love it.
I absolutely love it.
Yeah.
I mean, I get to spend time with amazing, creative, brilliant people who are doing amazing things that at the end of the day, make everybody else's life better.
Every day is different too,
Every
right?
day is different, and it's nonstop. I mean, I think that's one of the things. I mean, first of all, I think that you really do need to have an understanding that being responsible for other people's money is extremely stressful. Yeah. I mean, I always like to say that there are 3 things that people hold closest to their hearts. One is their family. One is what I like to link to their faith. Mm-hmm. One is their health, and one is their money. And you don't screw with any of that, because if you do, there's hell to pay. Yep. And, when someone works their whole life to accumulate amount of wealth and then they entrust it in you, at least for me, everybody's different. But for me, it is on my mind 24 hours a day, 7 days a week, 365 days a year. And, and it's a serious business. There's absolutely nothing about it that's not serious. And so I think, you brought up the glamour part of it. Mm-hmm. I'm yet to see that part,
right?
To be honest with you, because I'm working all the time, and I think it's that connection. I have a lot of people who are expecting me to shepherd their wealth. And
you have responsibility on both sides, to your LPs and to your founders.
Well, and that's the thing, right? Like I've said to you before, but it's founder focused and investor driven, and they have to be present at the exact same time. Right? You have to have your investor interest in mind, but you also have to have the founder's interest in mind. And you were talking about your own company a little bit earlier, and you were getting some advice from an investor mm-hmm. about, well, if you go down this route, maybe there's an exit earlier. But for you as the founder, you didn't start that company for the exit. You started it for what you wanted to build, and
there's
in your
a why behind it.
Yeah, and so now every single day you wake up and say, well, gosh, had I not done that, what could have happened? And I think as an investor, as a venture capital firm, we have to keep that in check. And it's hard. And if you care about those things, then it's on your mind all the time. Advice that I would give people is, and it doesn't matter if it's venture capital or if it's anything else, I think we live in such an incredible time that if you have desires to do something, now's the time to do it. If not now, then when? Yeah. And so, if being a venture capitalist is something that you want to do, I do think you need to have a bridge. Either you were a founder and mm-hmm. you understand because you sat in that founder's chair. Then you need to make sure that you surround yourself with financial people. Mm-hmm. Because at the end of the day, as I said, 3 things, right? And you don't want to mess that up. And, finance is important. I've been in the game for 21 years, but Maggie Vo is a CFA because I'm not a CFA.
Right.
And to me, that's the CFA in the finance world is the Academy Award.
Right.
Right. And I don't have it. I wish I did, but I don't. So I need to, surround myself with people that I know have that expertise so that I don't make any mistakes. So I do think, if you don't have the financial acumen and pedigree, then just surround yourself with some people who do. That's the great thing about partnerships. Mm-hmm. I'm not a technologist. In the early days, I surrounded myself with technologists because I needed to learn from them. I needed to understand what it was like to, sit in your share. I mean, I started 4 businesses when I was young, but that was a long time ago, let's be honest. And things change. And so, I guess, be more concise. If it's something you want to do, push forward, find some mentors. I'm a big believer in having great people around you that put their arms around you and try to help you, not make mistakes.
Definitely. I think that's critical, especially again, I was listening to Elon Musk on Clubhouse the other day. He did a Clubhouse, event.
I just got invited to that. I've got to get all that figured out.
Yeah,
so,
it was a few things he said that was funny. Number one, they asked him, what words of encouragement would you give to someone that wants to start a startup? And he said, well, if you need words of encouragement, don't start a startup.
Yeah,
that's
well
number
said.
one, right?
Yeah.
Well said. And then he said, because starting a startup is like eating glass and staring into the abyss.
Yeah.
That's what it's like. So you need people that can empathize with what you have to deal with every single day. Yeah. Another thing that I'm hearing a lot from VCs is like, this is a job where you don't really know how good you're at for like 10 years because the exits, well, you get some measurable stuff. This company's doing well. We see a path to it, but real results, liquidity in the fund and what company returns the fund and that kind of thing. This is a long game you're playing. This is not like short-term stock market returns. This is 5, 10, 15 years, right?
Well, and I think that, having experience in dealing with other people's money,
yep.
Because to your point, right, managing your investors' expectations
yep.
and managing their psyche is a whole nother skill set.
Yeah.
And it's extremely important. It's probably the most important thing that there is.
The whole mental aspect of it is huge.
The investor psychology is something I've been studying my whole life, and it's fascinating.
Yeah.
But yeah, it's a long game, and sometimes people start to lose their patience. And so, what do you do with that? So you're absolutely correct. You don't necessarily know. One of the things that we do, I think that not everybody else does, is we mark to market our portfolio every quarter. A lot of VCs don't, but I do. And the reason that we do is, again, I wanted to bring transparency to the asset class. Mm-hmm. And quite frankly, the investors that we have as limited partners, know of me from another world where transparency and mark to market is expected. Yep. So we actually do know on a quarterly basis that we're making good progress, or we need to work on some things. Knock on wood. You familiar with the J curve?
Yes.
Okay.
Yeah.
Well, we broke the J curve. That was one of our objectives. Yep. So we've never had a down quarter ever.
Amazing.
And so things, again, knock on wood, but call it luck, call it hard work, call it stupidity and just not knowing what the hell we were doing at the time. I have no idea, but things have gone well.
That's awesome, man. That's great to hear. As far as raising money from LPs, what are some of the things you've learned over the years that makes a great LP meeting when you're looking for a potential LP? I'm sure you've had LPs that you've met with that wanted to give you their money that you said, this is probably not a fit for our fund. And, I'm sure you kind of learned a few things along the way as far as targeting the right LPs to work with and how to invite them in. So what would you say to some of these emerging funds and how they should go about thinking about raising money from some LPs?
The first thing you've got to understand is that you're going to be told no. Yeah. I call it the rejection Olympics. And you got to be mentally prepared for that.
Sure.
And it's hard, right? Because, you think you have a great thing going, but you go in and for whatever reason, they just don't want to do it. And I will tell you that, building a venture capital firm in Miami in 2017 and 2018, raising money at those times was not easy. Right. Because again, but again, that was one of the things that I wanted to differentiate ourselves, right? If I was in Silicon Valley, why the hell would anybody give me their money, right?
It's a crowded market.
It's a crowded market, and there's a lot more people that have been in the game. So I didn't want to really think like them at the time. I didn't want to talk like them at the time.
Sure.
I sure as hell didn't want to dress like them, even though today I have on, the vest. But this is a Taxfile, by the way.
Well, at least that's a full. Is that a vest or that's a full?
No, it's a vest.
That's a vest. Oh.
Yeah, I tried to camouflage it a little bit so it wasn't so obvious.
At least you're repping the company.
Yeah, exactly. Yeah.
So how does it work as far as in your experience dealing with all this fund operations during the pandemic, right? All of a sudden we went from an in-person world to a virtual world. Was it business as usual, or did you find things were a little bit harder to shift into, talking to LPs virtually via Zoom, managing your founders, doing board meetings via Zoom? Talk to me about life in 2020 at Fuel VC. Was it status quo? You made it through, or was it a whole reinvention?
Money is a relationship thing.
Mm-hmm.
If you're gonna invest $1 million in something, in my experience, it's I need to be across the table from you. I need to look you in the eyes.
Yep.
I need to shake your hand. I need to see who you really are, and that's been doing this 28 years, so that's what I've expected, right?
Yep.
So when March rolled around, it scared the hell out of me. I'm not gonna lie.
Mm-hmm.
All of a sudden, what in the world are we gonna do here?
Yep.
And, but I think it's like anything else in life. If you put your head down, you know why you started doing whatever it is that you're doing, and you do whatever it takes. And, we just switched to Zoom, and I upped my, cadence of communication with my investors. It's the first thing that we did.
That's great.
So instead of only talking to them once a quarter, we talked to them twice a month through video. Anybody who wanted to come in, and we would have, some of these meetings would go 3 hours. We would bring founders in to speak on the video, right? So we'd have two founders come in and talk about, how are they doing with all of this? What are we doing to adjust and pivot and iterate? And again, to bring confidence to the investor. And that was really our main focus. March, April, May, June was just making sure that we were connected to the founders and that we were giving the founders everything that they needed from a guidance perspective. We cut everybody's burn rate significantly because we didn't know,
Sure.
what was going to happen. And I wanted to make sure if it's non-essential expense, we're getting rid of it.
You got to weather the storm.
Got to weather the storm.
Yep.
I mean, if you're used to paying, your coffee person, $200 a month to come in and serve everybody coffee, that's gone.
Superfluous stuff goes out the door.
Out the door.
Yep.
We're going to get down to just what matters,
Yep.
right? And that turned out to be a smart move. And then from just our internal perspective, I moved up the cadence for staff meetings.
Mm-hmm.
So every single morning we would come together and talk about what we were going to do for the day, and then at the end of the day we would close the day out. Right.
That's
and so
great.
it was my way of just keeping us connected, keeping us focused.
Yeah. And also the mental health check-ins, right? Super important.
Yeah. I didn't want us to just kind of go into the cave and forget about things. Right. But
Yeah.
God, what a year. I mean, if you think about it, right.
Crazy.
Go back to March and I was like wiping off my
Sure.
my
Your phone.
food that was
Yeah.
coming.
Yeah.
I mean, it was ridiculous.
Yeah, it was crazy
It was
times.
absolutely crazy. Yeah.
I want to hit on something that you just said, which I think is super important, is about communication when times are tough, right? Like March hit, and in a lot of examples, a lot of companies, funds, what have you, will pull back on communication. Let's kind of hermit up and figure this out, and then really think about what we want to say and how to communicate it. You did the opposite. You doubled down, you upped the communications. And one of the most important lessons that I learned as a founder was the constant communication to your investors at all times, not when things are going good, but when things are going bad, you need to communicate even more.
Yeah.
Right? When things are really, really tough, because it's easy to send that monthly report when your metrics are going up and to the right, et cetera. But really, communicating when times are difficult does a few things for you. Number one, it shows your investors that you're serious about this partnership and that you're on top of the ball and that you have your finger on the right pulse on certain things and you're thinking about the business in a thoughtful way and you care about the relationship. But what it also does is it flags certain things that your partner could help you with. Your LPs, your investors, your portfolio companies. If there are challenges, here are my challenges and here are my asks. If anybody can help me, right?
Yeah.
I remember doing that. There was a moment in time where I transitioned until, again, I was a first-time founder back in 2012, right? So I transitioned into these monthly updates because, an investor told me like that you should be doing this. So I did them. And as soon as I started sending them out, at the end of every update would be like, here's the good news, here's the bad news, right? And then here are my asks. Can somebody please help me with X? I remember saying, we need follow-on capital, right? And I remember typing that out, and I was like, this really pains me to write. Like, I'm going back to the well. I'm asking my investors that put in money that I've ran out of their capital, right? I remember writing that and so vividly being painful. And I remember, hitting that send button and feeling that pit in my stomach. And I got to tell you, man, within 30 minutes, there was 5 replies saying, how much do you need?
That's right.
Right?
Yeah.
So it goes back to what you're saying. Up the communication, right? When times are tough, right?
And get out of your comfort zone. Just like you were just saying, you know, you didn't want to ask.
Right.
It was outside of your comfort zone, but you did it, and you needed to do it because it's just about communication, right? And I've been through a lot of again, Wall Street. You think about all the down markets that I saw between 1994 and 2016, including the financial crisis, which I was right smack in the middle of it all. But through all of that, the one thing I did learn is that when people lack information, they tend to make shit up, and it's usually never good.
Right.
So you always want to, what we're talking about now is you want to up your cadence with respect to communication. I try to run our firm like a massive family. You said something earlier, that not every LP, we haven't accepted everybody's capital. And the reason for that is because when I meet with somebody, are they going to fit in with the family?
Right.
And if they're not, then it's look, I'm not 24 years old anymore. I've had a career already. I'm not doing this because I have to do it. I'm doing it because I want to do it. I want to leave a mark. I think we can do some things differently and better for the founder and for the investor. I truly believe that. So I don't want to work with people that I don't want to work with anymore. I had to do that for a long time, and I don't have to anymore. And so, these individuals, I care about them as they're my friends. They have my cell phone, they have my WhatsApp, and I have theirs. Yep. And you
were saying you're up till 3 a.m. You're probably texting with your portfolio companies and trying to help as much as you can. That's what people look for.
Yeah. And that's what we're trying to do.
That's awesome. Yeah. That's awesome. They know that they're up 3 a.m. working on something. They know that you're right there.
Happens all the time. I mean, Ola Sar, who's the CEO and founder of Soundtrack Your Brand, former founder of Beats that was sold to Apple. I usually, my day starts usually with Ola, 3:30, 4 o'clock in the morning talking about something.
That's great.
Yeah.
No, that's great. I love that. So I also want to kind of leave founders with some lessons that you see from your side of the table. We're going to leave your information in the description of the podcast so folks can reach out and learn more about you. But just so people have a heads up, what are some things you look for when you see founders and you're evaluating a company, maybe some mistakes that founders make when they're pitching you, some things that they could learn for their own pitches?
I think most people, if there's one thing that is common in making a mistake is, when we're nervous, we tend to talk a lot.
Sure.
And I'm told, I'm not saying it's right, but I'm told that I come across as kind of intense from time to time, and I think I make some people nervous. And sometimes they just start talking, and I'll just sit there and it's like, just shut up for a while and let me ask some questions, kind of a thing. So I think what I would say is keep your pace down. If you find yourself talking more than the person on the other side of the table, you probably need to figure out a way to get them engaged, because if, there's an old rule, right? If you spend all of the time talking, you think the meeting went well.
Sure.
Because you were talking the whole time.
Right.
Right. But the other person on the other side of the table is like, that was horrible. Right. So you want that other person talking, because it's not about you. It's about them. Right. You're trying to get them to fall in love with you. You're trying to find a way or something that makes them attracted to you.
Right.
And I think the other thing is, especially with institutional money, they know what they're doing. They know what they're looking for. They're going to move quick because they don't have a lot of time. And that's okay. So, maybe put 3 or 4 points down on a piece of paper that you want to get across, and somewhere in that time frame that they've given you, if you've touched on those 4 things, you're good.
Yep.
Just leave with being confident you did what you said you were going to do.
Yeah, that's a great point. Rebecca Donta from Miami Angels was here a few weeks ago. We did an episode together, and one of the piece of advice that she gave our listeners was, ask questions to investors, right? Ask them, do your due diligence on investors. How would you feel about if we went into this market? What do you think about this product? Give me some feedback. Like, this is a two-way street.
That would annoy the hell out of me. I'm just going to be honest. I want to ask my questions so I can get through the process and find out if there's a fit. I don't want to waste your time, and I don't want to waste my time. So everybody has a different artistic style. No, I'm not saying that hers is wrong. I'm just...
Love that. Everybody's got a different perspective, so it helps to hear everything. So that's number one. How about as far as, are you a deck person? Do you like to see a deck, or are you more like a people feel out kind of guy?
Yeah. I am a people person, but I'm also an analyst.
Yeah,
right. So I like both.
Yeah.
I'm probably more people-sided than most analysts that you would meet, but I am a math guy. I want to see the numbers. I want to know if it works. Because again, I'm responsible for other people's money.
Yeah, fiduciary responsibility.
Exactly.
You know,
and I take it very seriously.
Yeah. I want to also dive in. You said you're in the seed stage. You look at seed stage companies. Let's go into that a little bit, because that could mean a whole lot of things these days. Because nowadays there's a term that I didn't know of when I was running Live Ninjas, Preseed. Right? Which means, like, before there's even a product, before there's even something. Like, so where's the earliest you operate when founders think, hey, I want to reach out to Jeff? What's that threshold that they need to meet?
I want to see at least $500,000 of revenue on the table for an institution. Right now, there are a lot of angel investors and people out there who will go into those really early, because when they work.
Right.
I mean, I got a friend of mine who actually has a VC in town in Miami here. I have a lot of respect for him, but before he started his VC, I mean, that's where he's made his wealth.
Yep.
To me, it's crazy. It's just, it just goes against everything that I've been educated to do or I've seen. But I want to see, $500,000 of revenue, because that tells me that, whatever this idea is, it is attracting somebody.
Right.
Okay. And now we can come in and maybe we can provide some guidance and some help. But, I would say that over the last 4 years, my own investment palette has changed as well. I think, again, it's my humble opinion, but to me, and I've done a lot of studies on big firms, and how they do what they do. I think the key to this business from an investor's perspective is you identify some great A-round companies, bridge to B and B. And, when you get to the B and the C round, you have a lot of knowledge now. It goes back to what I was saying, knowledge being scarce. It's now becoming, you've got plenty of information. You can make really good decisions, and that's where you double down. I mean, if you look at our portfolio, our first investment could be anywhere between, if it's an A round, it's probably going to be around $1 million. But by the time you get to a B or a bridge or going into like I said, Friday night, we committed to $50 million. Now that's a big check.
Yep.
I mean, that makes me very nervous. Sure. Right now, I'm going to diversify that risk with my partners at IDC Ventures.
Yep.
But between, to me, it's one firm, it's one team. Bobby Aikenhead, who's my partner over there, I think the world of him. And we were at this meeting, and I looked at him and I said, well, what are we going to do? And he looked at me and he says, well, I can't do anything without you. And I said, well, let's just take what's left. I don't know how the hell we're going to deal with it yet, but let's just do it because it's a great company, and I love the founder, and it's the biggest commitment we've ever made.
That's amazing.
Yeah,
that's exciting stuff, man. So I want to make sure there's a call to action for folks that are listening that they like what they hear and they want to reach out to you. Are you interested in talking with folks that are getting going to start building the relationship, or do you want them to reach out later on at the seed stage? Or
look, we're an evolving city.
Yep.
And we want to be a part of that. So yeah, I mean, I'm not going to say you're always going to get me. Sure. I think I've got something like 25,000 unread emails right now, but I do the best I can. But someone at the firm, definitely. I think if you're a founder and you're looking for institutional money, again, you've got some product market fit, you got some momentum going, you got some revenue there. Reach out to Olivia at fuelventurecapital.com. She is our core analyst. It's her job to do all the first pass analysis.
Yep.
If you can get past Olivia, you're going to end up on my desk anyway.
Yep.
So I think that's the right way to go about it. And if you see me out on town, don't hesitate to come up and say hi. I mean, I love that, actually. Saturday night, I was with some friends from New York, and we were at the W, and we were waiting for the car to come. And you know, this guy came up, you know, you Jeff Ransdell? I'm like, yeah. And he says, you know, I got this company. And I'm like, well, you know, here's Olivia, you know, send it to her and love to, you know, good luck. And I hope it works. And, you know, that's what I want to see.
Yeah.
You know, it's, I think that's cool.
That's awesome. Well, very cool, Jeff. We're going to leave all of the information that Jeff mentioned in the description. So Olivia's information, also the website where they could check out more about Fuel. And yeah, man, thank you so much for being here.
Thank you. I appreciate it, my friend.